is the affordable housing story over?
The demand for affordable housing over? No, I don't think so.
I have a concern that in times to come, we will not see enough of supply. And that can have an impact. It's simple economics. That can have impact on the prices of affordable housing as well.
Whether we serve the volume or we serve the value.
I believe there is a demand, but the supply is limited.
Because in the last 4-5 years, no supply of affordable house come. No considerable amount of supply has come in affordable housing.
The reason why it seems like a huge growth industry is not because of ticket size, but because of the fact that the value of properties has gone up significantly.
We must understand how many persons are taking the loan of 1 crore, 10 crore, 20 crore, 50 crore for buying a house.
Talk about any housing finance company today. They are getting into emerging, they are getting into affordable. They may call by different name, different segments, but this is the focus.
So, as we have seen from the Knight Frank report, home loan is the most preferred factor for buying a house. And who better to take the report forward with a stellar panel that we have with all the top housing finance companies of the country. A big round of applause for all the panelists. While the survey, the Knight Frank survey is extremely interesting and insightful, and it says that aspirational buying is the key driver for home loan. But if you go deeper inside, there is another interesting facet, which says that properties below 50 lakh, which constituted 54% of the sales in 2018, has now account only for 28% in 2024 so far. At the same time, luxury market has witnessed a significant surge. Property prices above 1 crore and above has grown from 16% in 2018 to 43% in 2024 so far. So the main issue here is that, at a time when affordable housing is a policy statement from the government, so is the affordable housing story over? That is the big question we would like to know from the panelists, and we would like to start with Mr. Adhikari, the largest housing finance company in the country, the MD and CEO of LIC Housing Finance. Yes, Mr. Adhikari.
Yeah, thank you, Manojit. I think your question was basically on is the demand for affordable housing over? No, I don't think so. I don't think so. Well, if you study the Indian economy, it's only 10 to 15% is organized, almost 85 to 90% is unorganized. So the affordable segment is basically catering to this unorganized segment of society. So definitely I would not think so. I think so. You pointed out to report that the share fell down from 54% to somewhere around about 20%. I think reasons are twofold. One is a demand and supply issue. I believe there is a demand, but the supply is limited. And the reason for that basically, I would say, is I don't think many of the developer community is interested in getting into the affordable segment, right? It is low cost, definitely. It is away from the city centers or the urban centers. They are mostly into the outskirts of cities where they are not very sure of a demand because of the livability conditions are not there. And developers, they are into a business. They want margins. I don't think right now the affordable segment or the affordable sector of housing is as margin intensive as, say, a semi-luxury segment or a luxury segment. And hence all our the builders and the developers are into the semi-luxury and luxury. We hear of, in the morning we were talking of projects in Gurgaon where 400 flats of each flat costing 100 crores are selling off like hotcakes. So any builder, any developer would like to go there where he can accomplish his probably yearly sales targets, yearly revenue targets, and daily profit targets in one project rather than get into the rigmarole of developing an affordable segment project where it does not have too much of margins. That is the reason I believe. Honestly, I believe that the demand for affordable is definitely there. and will continue to be there in the years to come.
LIC housing will be continue to be there.
Yes, we are there, we were there, and we will definitely like to increase our share in the affordable segment.
That's great to hear. But Mrs. Zia, if I can come to you, do you agree with the fact that the supply constraints so far as affordable housing is concerned because margins are not there?
Bang on. I would go by that. And as Mr. Adhikari just explained, the reality is that the stocks are very limited and developers are not adding more. This is one sector, as we also spoke about, like if one project, as he gave the example, is giving you almost double the annual revenue target of that organization only on one project, then what case does it make to do 25 projects of 1,000 apartments each and continue to put so much of efforts to sell them? So the problem with affordable housing, while the high interest rates, etc., have had an impact on the demand side, but the impact on the supply side is much more than the impact on demand side. So my concern is that in times to come, when the PMAY 2 is giving lots of incentives for the lower end demand to be generated, I have a concern that in times to come, we will not see enough of supply. And that can have an impact. It's simple economics. That can have impact on the prices of affordable housing as well. Because in the last 4-5 years, no supply of affordable house come. No considerable amount of supply has come in affordable housing. So in times to come, the concern is very huge that the demand-supply scenario may push the prices in affordable housing higher in next year and a half or two when PMAY 2 starts showing its result on ground.
Mr. Tripathi of Aadhar Housing is a company which is extremely focused on the affordable segment. So, Mr. Tripathi, how to solve this problem of affordable housing? What is your prescription?
Actually, first of all, I must be thankful to Mr. Ghulam Jia and his company Knight Frank. They brought a very insightful report. Last 4-5 years, you have been reading from 2022, that the higher segment growth is going up very high. We are all listening. But we must understand how many persons are taking the loan of 1 crore, 10 crore, 20 crore, 50 crore for buying a house. What is the addressable market that we have to see? In India, today, 95% housing loan requirement comes from economically weaker section and low-income group. And they can't afford a house beyond 25 lakh rupees or 30 lakh rupees. That's why Reserve Bank of India and Government of India has also kept the property price in metro as 45 lakhs for affordable housing and non-metro as 30 lakhs rupees. So we have to see the objective point of view, whether we serve the volume or we serve the value. From the housing market side and the economy side, if the more value is created, the credit growth happens. And housing always has a multiplier effect on employment. Housing always has a multiplier effect on the supporting the 250 industries and services sector. That is the economic part. Now coming the people part. When today also, the present report which says 64% home loan borrowers comprises below 25 lakhs. 24% is their contribution in the value and 64% in terms of number. The 1 crore and above, which are telling, there are only 12 to 13% people who buy houses above 1 crore and above. For taking a home loan of 1 crore rupees, you need to have 25 lakh rupees minimum your annual income. How many people have 25 lakhs and above? So we should think where the country lives. We have got, today as on date, I don't go 2011 population, take tier 1, metro and tier 2. There the requirement will be 50 lakhs and 20 crore and 50 crore rupees, the housing. Now the tier 3, tier 4, tier 5, tier 5 is also population from 5,000 to 10,000 population. All roadside small towns. They are fast developing. And if you go, another report of State Bank of India of 2022, they have mentioned 32% requirement was in tier 3 and tier 4 for the housing. In 3 years' time, by 22, it has gone to 22%. Sorry, 36%. So that clearly indicates the requirement in tier 3, tier 4, tier 5 is fast improving. And that is the objective of a government of India. The government objective is to see the credit growth happens, employment is created, and the people get a reasonable dwelling unit in a community development area, instead of living in a one-room kitchen where 5 people are living. So my simple point is that the requirement of affordable housing has been there, is there, and it will continue for next 25 years. As the income grows, the quantum will increase. 30% cost of construction has gone up in last 4 or 5 years. The person who was taking loan below 15 lakh rupees now takes loan about 20 lakh rupees. Person who was taking loan of 25 lakh rupees will take loan of 30 lakh rupees. So that shift has happened. The only thing I am telling you, and I am telling second thing I tell you, is still the housing finance companies, they are serving loan below 25 lakh rupees to the extent of 42%. Whatever you have seen 24% from 2018, for 38% below 25 lakhs has come down to 24%. In terms of number, from 79%, only 64% has come in terms of volume. Banking system and the premium housing finance company, their huge shift happened for the high value segment of housing. The lower income segment has gone to the housing finance company. If people like me and other affordable housing finance companies say, still today, my 25 lakhs and below disbursement is 85%. So my point is that, and there are about 65 affordable housing finance company. The affordable housing finance company is going to stay, and that's why the Prime Minister Housing for Scheme is launched.
Right.
Because the government believes if 37% today urbanization has to go 40% by 2030 and 50% by 2047, the U means that as urbanization moves, there will not be only 50 metros, 57 metros, there will not be only 100 towns, cities, there will be almost about 500, 600 cities.
Right.
And that's why one Kotak report also mentioned that now housing is not confined in 8 top cities, it has gone to 200 and beyond cities. So please understand, their value will be not much. Today, again, I'm telling you, 60% housing happens in the urban centers. But what about periphery? What about other areas? So affordable housing is there and it's going to stay.
Affordable housing is going to stay. That's what you are saying. Mr. Subramaniam, have you seen significant changes in the ticket size, average ticket size, which supports the theory that the affordable housing story is sluggish?
You know, I just would like to point out to one single glaring point in the Knight Frank study. The first slide said that in 2011, we had about 275,000 units sold. 2023, there were 325,000 units sold, which means in a period of 14 years, the number of units has gone from 275 to 325 only. So before we celebrate the real estate industry, let's understand that that is a growth rate of under 15% over a period of 14 years. The reason why it seems like a huge growth industry is not because of ticket size, but because of the fact that the value of properties has gone up significantly. Point number 2 is when you turn around and say that the contribution of under 25 lakhs was so much in 2011 or 14 and has gone up to 41% in 2024 or 23, you have to keep in mind that a lot of migration has actually happened because of the value increase, because it's become more expensive to own real estate in this country than what it was. Bandra used to be 10,000, 12,000 rupees in 2011. Bandra is now at 60,000 rupees a square feet, or maybe even more right now. So that's led to an increase in the larger value properties being sold. It'll be very interesting to see the same graph per square feet.
Right.
Right, in terms of how many square feet were actually sold in residential in 2011, how many got sold now, the story will be very different. What is an affordable unit in terms of square feet? If you plot that, you would find that that migration has not happened significantly. You still have affordable housing in demand in a segment of population. I agree with Tripathi ji completely. The reason why people are not buying affordable homes anymore is because they can't afford. That's the name. It's called affordable housing. It's no longer affordable. So if you really want to increase the sales of affordable housing, I think a lot has to be done by affordable housing finance companies, by banks. At this point in time, affordable housing finance companies are playing the role of banks. Banks do not fund self-employed individuals, period. There is no debate on that. A lot of affordable homes were in the past bought by self-employed.
I will come to the issue of banks, yes.
Okay.
But finish your point, yeah.
A lot of affordable homes were bought by self-employed earlier. Today, they don't have access to funds. How many self-employed are being funded by banks? Today, we fund 80% of our portfolio is self-employed. 60% of their portfolio is self-employed. A lot of PNB housing is self-employed. But you look at banks, you have a salaried with a salary slip, you'll get a loan from a bank. You're not a salaried, no salary slip, no income tax returns, only assessed income. No bank is willing to fund them. Where do they go? So you want them to buy a 25 lakh property or a 30 lakh property without a home loan. How are they going to buy?
Right, right. I will come to you. But Mr. Khoshgi, do you think we need to change the definition of affordable housing because there is so much price increase has happened?
I think we have to put things in context. Last 15 minutes, this entire panel is discussing about affordable housing. That is the importance, which is there, which the segment has gained. Now, always we talk about gap in demand supply in affordable segment. See, today if you look at the entire book built by affordable companies, it's little over 1 lakh crore out of 34 lakh crore. So what is the percentage? It's hardly anything. If you look at the potential, it is in terms of sheer value, it's about 40%. It's about 40%. Today, I think structurally for affordable segment, at least for next few years, we always say that developer participation is not there. That's true. It is not there because it's not viable. There are so many challenges. Today, look at the focus of government. Today, look at the focus of every single housing finance company. LIC Housing, big brother, they are now getting into affordable. PNB Housing, third largest, we are into affordable. Look at Bajaj, they are getting into affordable. Talk about any housing finance company today. They are getting into emerging, they are getting into affordable. They may call by different name, different segments, but this is the focus. Why is that? Because all the banks, they focus on super prime and prime. So market is huge, demand is huge. On the supply side, self-funded, when I say self-funded supply, it is even today, 80% of the affordable business is built based on a plot purchase and construction or purchase of independent house. Where is the problem in supply? The problem in supply is developers, they don't come out with affordable projects because there are 3-4 challenges. One, land cost is very high. Number two, the time taken from land acquisition to launch of the project, the period is quite long. Okay. Number three, the project itself at this point in time is not viable. And therefore, a lot of developers, they don't want to get into affordable. But that is just 20%. Today, if you look at the entire country, barring top 2 cities only, Mumbai and maybe Delhi, rest of the markets, there is a good portion of affordable which all of us are doing. So there is affordable business in Bangalore, affordable business in Ahmedabad, Chennai, Hyderabad, you name the city. So there is a constraint on supply from a developer. I think it's a structural issue. Government has taken a lot of initiatives. Today, if you look at, they've committed 10 lakh crore into housing. And only for PMAY, they've committed, wherein close to 1 crore customers will benefit over a period of next 5 years, which means 20 lakh customers every year will get subsidy. So affordable, the demand, the question is not whether it is over. it has not even started.
It has not
It has
even
not
started.
even started.
Okay.
And as Mr. Tripathi said, as Ravi said, as all of us are seeing the pulse in the market, this industry will survive for next 50 years, not even 10, 20, 50 years. Today, the focus is not there, which is why there is a larger role which the housing finance companies have to play, and that is precisely the direction in which all of us, all the housing finance companies are getting into this segment.
Right, right. But Mr. Adhikari, policy prescription, he is highlighting some of the long gestation period, which is a roadblock for developers to go into affordable housing. So do you think from a policy perspective, there has to be certain steps that is to be taken to boost affordable housing?
Yes, definitely. I think if we really want affordable housing to take off in the sort of vis-a-vis the potential it has, yes, I believe all stakers have to put in corroborated efforts. It cannot be just the developer community or the lender community or the sort of borrower. I think all of us need to get together. Everybody has a role to play. As far as we, the lenders, are concerned, that yes, banks are not into the affordable segment at all, the self-employed segment at all. LIC HFL, my company, we are the biggest housing finance company. We were not there overtly, I would say. Covertly, we were there. But this year, we've taken a conscious step to get into that segment. We've launched a product very recently in the last month. But slowly but surely, that is the place where we want to be and where we need to be. That is there. As far as the government is concerned, yes, PMAY 2 is coming, is getting launched on the 14th of this month in Delhi.
Right.
All of us have been invited for the MOU handover ceremony. So officially it will be launched on the 14th. 1 lakh, as Girish said, 1 crore houses for the urban poor in the next 5 years. That is significantly going to boost the demand. The other part of it, I think the builder community, yes, we have been talking of a short supply of affordable projects. For that, yes, you need the builder community to come in as well, but they also need incentives. It takes a huge amount of a gestation period in developing a project is huge. That needs to come out. They have to think of innovative ways and methods. Something like prefabricated housing is something I read about, which China employed in a big way. I was seeing a sort of YouTube reel when China built a 10-storied hospital in 72 hours, I believe, using prefabricated. And then again, clearances from the various government and other agencies for various NOCs and all that. That needs to be speeded up, some single window thing. Some SOPs in the form of, I believe, affordable credit for the builders, affordable finance from the builders through some government subsidies or something of that sort. Registration fees cut for affordable housing was one of the pointers pointed out by Gulam Zia and his Knight Frank team. So I think all of us need to get together to create an ecosystem whereby this affordable segment takes off, because this is one segment, as Girish says, has just not taken off as yet. And I believe huge potentials are there. And I personally believe that the future of the housing finance industry, or at least the lender community, if I may say, it depends on the taking off of this affordable segment.
Right, right. So as Mr. Adhikari says, the PMAY 2.0 will be launched on 14th in Delhi. So Mr. Zia, do you think this can be a game changer? This can be a solution to the points that you have raised in your report, the buyer preference and all. Do you think that's an enabler?
Well, PMAY 1 has done a wonderful job. And one of the reasons, while earlier we were focusing only on developers' inability to come into affordable housing segment, but from policy framework, Pradhan Mantri Awas Yojana was also in kind of a transition. It was for last 2 years. The previous one had expired. The new one was taking shape. It has taken some time for us to reach this stage when PMAY 2 is now in front of us and it's about to be rolled out. So that is where the key impact of affordable housing will be felt. On the other side, when we talk about affordable housing, it obviously does not stop at only EWS. It also has a large part of MIG in it as well. When we are talking about 45 lakh as the limit for affordable housing, even in Mumbai, you have a sizable chunk of inventory which falls in that category. In fact, of the top 8 cities, Mumbai has the largest share of affordable housing sold. It will be very surprising for all of us to know. In Mumbai, we sell the maximum number of affordable units across the top 8 cities, much more than even in Bangalore or Pune. So it remains to be, we need to expand the horizon of affordable housing. It's not just about 5, 10 lakh or 20 lakh rupees apartments. It's even 45 plus and so on. Various developers' lobbies are lobbying and reaching out to MoHUA to increase this 45 lakh to a higher number, especially for the urban, Pradhan Mantri Awas Yojana, the urban side of it, the 1 crore that you're talking about. There are suggestions that it can be taken up to 65 lakh or 70 lakh, at least for cities like Mumbai, depending upon the ready reckoner values or circle rates, etc. So a lot of those things are in the making. So from the policy framework, of course, a lot is happening. So the future, as we are all talking about, while last couple of years and at least last 2 years have really not been too good for affordable housing, but going forward, things are very distinctly looking to be falling in place, with PMA 2.0 playing a big role. And a lot of these policy framework changes are expected. We spoke about the stamp duty cuts, etc. But stamp duty cut, unfortunately, is a state subject. Every state will have to play that role. In Maharashtra, they did that immediately after COVID. In fact, the reason or one of the catalytic effect played by the stamp duty cut to bring the real estate sector circle back towards the higher end was stamp duty cut. While it is nominal, 1% or 2%, but it makes a huge impact. However, it was hijacked by the upper end, something which you would have seen in our report as well. The stamp duty cuts are typically hijacked or used more by the upper end, because at 1 or 2% when you're buying a 50 crore apartment is a huge number. You can buy your next Lamborghini out of that 1 or 2% the cut of stamp duty that you have. But the same thing for a lower end house, when you have a 5 to 10 lakh rupee of house, that 1% or 2% can barely afford them a washing machine or a sofa set. So it doesn't make much of a difference on affordable housing as far as the stamp duty cut is concerned. As I said, it is normally hijacked by the upper end. But there are a lot of these impactful statements that will come as PMA 2.0 is rolling out, and various state governments are doing their bit to improve affordable housing. So as all of them saying, affordable housing story is now building up. We have a long way to go.
Right. But Mr. Tripathi, do you see significant benefits from PMAY 2.0 as compared to the previous one?
Yeah, I just add what Mr. Jia has said. One is on the policy side, I tell you. 2.0 scheme is a much better version. PMY 1.0 was it. They found what were the mistakes and what was required. 2.0 scheme is very thoughtful scheme. One, the subsidy amount of there are 4 versions of it. One is the beneficiary-led construction. That was earlier also, it continues. Why I am telling you why affordable housing will exist? Because 60% houses are self-constructed, which are not in the reckoning of any research. That is a very unfortunate or fortunate thing you can say. Across the country, even in Bangalore also self-construction takes place, that they count. But what happens in tier 4, tier 5, tier 3 city, nobody counts that. That's one part. Second thing, beneficiary-led construction is one. There they are giving subsidy amount 2.25, Government of India is giving 25,000 lakhs, state government is giving. Second is more important, what Ms. Jia mentioned, supply side is almost negligible in affordable housing. So for affordable housing in partnership, last time the government gave developer full benefit of the tax rate during the period of construction, 5 years, which is now existing now, no more existing. What government has done, they have advised the state government, as he mentioned, it is a state subject. One action they have to take by December 2024, they have to ensure stamp duty is brought below 1% for economically weaker section and LIG income group. That is one. Second, they said that developers should be given, all these affordable housing finance developers, AHP, their subsidy will be again 2.25 lakhs with the state government, central government. But they said that by June 25, the conversion, what happens from non-agriculture to agriculture are so much, that should happen. Conversion charges should be waived. The other charges which they are doing, they should be waived. They should have in their development plan earmark the land for affordable housing, because what happens if somebody takes a house in Berar, he works in Bandra, he cannot commute properly. So the house has to be here only. The government wants there should be a zoning should happen so that there should be proper land available in the next development plan. This is the instruction for all state governments. Some may follow, some may not. So a lot of policy measure government. Second thing what government is going to do in next week only, 45 lakh rupees construction of house was having lowest GST of 1%. They are going to increase to 55 lakh rupees in next GST council meeting. It is already recommended by Council of Ministers. The affordable housing amount, which I think we have been talking and deliberating, what was 10 lakhs about 5 years back has gone to 15 lakhs. Probably it will keep on evolving as the cost of construction goes up, people's income goes up. Tomorrow affordable housing can be 50 lakhs also. The government has stuck up 25 lakh rupees is the loan amount, income level up to 9 lakh rupees for MIG, 6 lakh rupees for LIG, 3 lakh rupees for EWS. Actually, the income level should be revised because this was done 2015 and the inflation index has not been given. Probably government may revise it. Government still feels that there are large number of people, they require up to 25 lakhs. And in affordable housing in partnership, there is a mandate that they may have small houses, low income houses, higher houses, but 25% of inventory has to be for economically weaker section. That is also a mandate. So the third scheme is interest subsidy, we have been talking. The subsidy now will be given in 5 years. Earlier subsidy was to be given immediately after disbursement, and the loan account was, the principal amount get reduced and the repayment was getting reduced. Now subsidy 36,000 will be given every year, and therefore there will be a 5 years lock-in, so that many dubious developer of a small value, they were constructing house, taking proxy customer, getting loan done, and the subsidy amount once comes, they were closing the account. So 5 years before he closes the account, subsidy he will not be paid. So many measures government have taken to ensure that the first time user only get the benefit, not the proxy customers.
That's a very interesting point. But now coming specifically to the housing finance companies, there are a whole lot of regulation which has been announced over the last few years. Regulations have, of course, been tightened, both for NBFCs as well as the HFCs in particular. Mr. Subramaniam, for example, one of the regulations says that which does not allow HFCs to charge interest rate till the check is handed over to the developer, which can only be done after certain things like the sale deed agreement, which of course hit the profitability. So, but do you think these steps are good for the health of the sector overall, even if there are short-term pains?
Look, we can debate this till the cows come home. Okay, but the point is that anything which is eventually good for the consumer will eventually translate to be good for the industry. Anything which is right to do is always good for the industry. And I think this is not only the affordable housing finance companies or the housing finance companies, but it's the entire NBFC sector and some banks as well, which actually were handing over the checks to the customer late, but starting to charge interest rate much before.
Right.
Now, there was a reason for that. We can always debate the reasons. Normally, when it's a housing loan, you're supposed to cut the check has to go into the agreement, so you have committed funds, so you start charging interest rate, etc. But the regulations were a bit unclear earlier. Now that the regulations have been clarified, every single affordable housing finance company, NBFC and bank now follows that. So to that extent, it's not something which is specific to the HFC sector. I would personally think that there are no regulations per se which are detrimental to the affordable housing finance company compared to a regular HFC or an NBFC. I think, if at all, affordable housing finance companies get a little bit of a benefit, because now if you look at the way the new NHB MD has been articulate about the support to housing finance companies, I think it's commendable. Now, he's gone on record saying that if somebody is giving out loans of 80 lakhs and 90 lakhs and 1 crore, why should they get refinanced from NHB? So he's actually moving towards a regime where the affordable housing finance companies get the support. The larger challenge for me, particularly if you look at it, where I need support from the regulation, where all the affordable housing finance companies need support from the regulation, is the fact that, and I've been saying this at every forum, is the fact that prepayment penalty, okay, is a bit of a sore point for us. Because what happens, I give out a loan at 12% largely because there's a certain amount of risk enough in taking on a first-time borrower. I run the customer for 12 months, for, 8, 9 months, 10 months, 12 months, season the customer, help him build a credit score. The moment the credit score is built, the moment the customer has shown an intent to pay, maybe one of those prime of housing finance companies or the larger housing finance companies or banks take the customer over. So in the process, my costs of operation go up because I build a customer, I can't keep him. Now that, if I'm able to impress on the government and the regulators to at least look at a 2 to 3 year window where I hold on to the customer, or the customer pays a certain prepayment penalty if he needs the benefit of a better housing rate, I think that should be allowed. But apart from that, there is nothing.
So the menace is created by the DSAs.
Sorry?
The menace is created by the DSAs.
No, it is not. To the contrary, if you look at it, the menace is not created by the DSAs. You need, it's just that there are so many players in the industry who are chasing the same customer. Why? Go after new customers. There are 30 lakh of houses being sold every year. Go after those customers and go after those loans. Why come to a credit-tested customer and make life miserable? If you want to make life miserable, pay me my fees and go. I incur costs in underwriting the customer and taking him on board. And I don't recover my costs for the first year and a half.
I understand that's a very valid point you're raising. What happens is that a new customer, within 6 months, 8 months, they just change to a different institution just because of 25 basis point lower interest rates. And so it's a losing proposition. But Mr. Khoshgi, how do you think this problem could be solved? That, just because, particularly from banks generally offer a finer rate as compared to HFCs.
I'm not very sure whether I have answer for this or not, but I think very clearly there are two things which I can talk about. So when we talk about interest subsidy scheme, which government has announced, it's a very good scheme. It says that close to 1 crore customers will get the benefit of subsidy over a period of next 5 years, which means 20 lakh customers every year, which is quite a lot, considering today the company is focusing on this segment. That's number one. So here what happens, there are two conditions, important conditions. One, the customer should not be delinquent. Once customer is delinquent, customer will not get subsidy, because subsidy is paid every year for 5 years. So it's not one time, number one. Number two, till the customer gets the last tranche of subsidy, which is from today till 5 years, customer cannot switch. What is happening today is that, as Ravi rightly said, we put lot of effort, we onboard the customer, let's say at 12% or 11.5%, after 1 year's time, customer switches because customer is getting a slightly lower rate. Now this issue is solved under PMAY because for 5 years, customer cannot switch because customer is getting the benefit. Housing finance companies have put in the effort. So the book remains for 5 years. Otherwise today, the average loan on book for affordable companies is about 3.5 years. Number one. Number two, I think this is more to do with the entity per se. For example, you look at PNB Housing. Today we have 3 segments out of 4 segments. Super prime, prime, emerging, and affordable. Now affordable, I take a higher risk, charge slightly higher. When the customer is ripe for a switch, I have another segment where I can internally switch from affordable to emerging. Emerging rates are slightly higher than prime, lower than affordable. From emerging to prime. And eventually it will go on rest with any bank. So one is internal solution. Second is structurally, I think PMAY2 has addressed this to a large extent. I think we have to look for some more. Going forward, if there is a regulation which says that because the primary motive of government, which is stated, declared, told multiple times, is to promote housing in the EWS lower and middle income group, which is why all this focus from government is toward this segment. A, B, all the housing finance companies eventually will move to emerging and affordable kind of segments. If there is something which comes in saying that, for 2 years, customer is locked till customer switches, it's going to help.
Mr. Adhikari, is stickiness is also an issue with you? Did you see customers switching very soon because of other?
Yeah, this is a problem all over the entire industry, and I think, honestly speaking, we ourselves are responsible. We are all shooting each other in the foot and feeling great about it. But
That's
yeah,
the candid admission.
that's a sad part of it, and we'll have to live with it. Yes, as Girish said, in PMAY2, the government has taken steps to ensure this switching does not happen. And maybe the regulator also needs to come in that, as Ravi said, that there are onboarding costs. And right now, if a customer switches, I cannot charge him any prepayment penalty or anything of that sort, which is slightly unfair on housing finance companies. I believe the regulator needs to have a relook at that. And if it wants to stop book transfers or balance transfers, probably the HFC which has onboarded the customer needs to be reimbursed its cost of onboarding. So that is all. Otherwise, I believe it is going to stay until and unless something serious happens on the regulatory front or otherwise. Yes, it's a part of it, and we'll have to live with it, I believe.
Right. We are running out of
I
time.
will take
so-
1 minute just to add in that what all my three friends have said. PMY, of course, the business BT out by anybody is now ruled out because 5 years lock-in is there. If business transfer happens, then subsidy we will not get. The business transfer, that is from one company to other company, one bank to other camp, is a prevalent feature. Majority of the cases which are DSA sourced are even sometimes customer. This happens for 3 reasons. Ravi also mentioned. If for interest rate reduction it happened, it's a fair thing. It is the customer's choice, which regulator also permits. Regulator also likes it. Customer should have freedom. There are 2 other reasons which are cause of that. One is the top-up loan. I am not comfortable to give top-up loan to my 1-year-old customer by revaluing the property. Customer wants to have some additional loan on that. That is one situation. Second situation, the customer's account is in distress with us. He is finding to service the installment and he requests me for extending the loan period.
Right.
If I extend loan period,
It becomes
account
NPA.
becomes restructured in my hand. If the same account goes to other bank or other company, he gets top-up loan also and he gets elongated repayment schedule. So that account is not, it is a restructure. It is regulatory circumvention. Actually, this somehow has missed out from the eyes of regulator. If a customer, I cannot restructure by increasing the repayment period for a genuine need of having the income loss or some income reduction, I cannot restructure. He can restructure, X can restructure. This is regulatory circumvention. So if business transfer may be encouraged or usually encouraged for the interest reduction, no problem. But for other 2 regions, there should be some check.
That is a serious issue,
If the
yes.
top-up loan tenor is capped at the residual tenor with the original lender, I think a large part of the problem will get solved.
Right. No, but it's a serious issue that if I go and tell my bank or HFC to restructure the loan, they have to incur higher provision. But once I switch, there is no such requirement for the new. So I think that's a very serious issue which you raised. Since we are running out of time, one last point I would like to ask, which was also highlighted in the Knight Frank report, interest rates. They also play a role in generating demand for housing loans. Do you think the interest rates in India are set to turn? That is the expectation. Globally, it's already turning. Do you think that can boost demand for housing loans, particularly affordable?
The gentlemen sitting over here are experts in the home loan, interest rate movements, etc. From a development or from a demand perspective, it's actually given that if the home loan rates are coming down, the transaction numbers will shoot up. It's something which we have seen time and again and again. So it's a no-brainer. Of course, we are expecting the home loan interest rates to come down because the worst hit is the affordable market. The upper end of the sales are typically happening on the wealth creations, etc. Don't need so much of a home loan. It's only the lowermost end of the society. For buying home, they need home loan interest subsidies and they need affordable, I won't call it cheaper, affordable home loans. And that's something which is also one of the reasons why for last 2-3 years, the lowest end of the market from demand side has been worst hit. So with the change of cycle, when the home loan interest rates start coming down, definitely affordable housing will be the biggest beneficiary of that.
Affordable housing will be the biggest beneficiary, not so much the luxury segment, because for them 25 basis point, 50 basis point rate cut does not matter. Is that the view, Mr. Subramaniam?
I broadly agree with Mr. Jia, but you see, every 3 years the interest rate movement happens. Last 50 years, you see, 3 to 4 years it happens. And I personally feel the interest rate is inelastic to the demand of the housing. Lower interest rate only creates a good feel that I should take house because interest rate has come down. After 3 years, if interest rates go by 2%, then what he will do? So what he says, the people who are at the fence, who are looking at the interest rate has come down, they get encouraged. Otherwise, for 25 lakh rupees loan, 1 or 2% interest rise does not increase the EMI so much. So if you have a need, you will take a house.
See, I would agree with Tripathi ji, but I have a slightly contrary view to what Zia said. 1% drop in interest rate is 65 rupees on EMI.
Right.
Okay, so it's not much of an impact. If you drop interest rate by 2%, or 3%, 150, 200 rupees a lakh, doesn't make much of a difference. It's a good mood enhancer. So, acha interest rate kam wala le lo. The impact of that is on the loan ticket size. So, typically what happens is your eligibility for a higher loan goes up, if your interest rate comes down. And hence, anybody who can afford a 40 lakh loan can now afford a 43 lakh loan on the same EMI. I think that's where the whole equation moves. But the contrary to that is, if interest rate drop is a mood enhancer, suddenly demand goes up.
Right.
Okay, your property prices start going up. So the customer ends up losing a lot more through the increase in the property price than the gain that he gets on the interest rate drop. So the real demand booster is going to be if somebody figures out a way to reach out a 45 lakh property to the customer at 40 lakhs. I think that's a bigger demand booster than interest rates. Otherwise, look at last 4 years, interest rates have been going up. Now, where has the demand gone down for people like us? All of our disbursals are going up year on year, month on month, quarter on quarter. So it is not particularly important. Interest rates are derived.
A related issue is fixed rate home loans have vanished from the market. Do you think, Mr. Khoshgi, the interest rate cycle is coming down? It's time to relook at a fixed rate home loans?
I agree with what Mr. Tripathi said, what Ravi said. I think interest rate has to be stable. Generally, it is told when the interest rate goes up, the default rate would go up. Because when the interest rate goes up, obviously the burden on the existing set of customers who were appraised at X level of capability, when the rate goes up, they're supposed to pay higher than their capability and therefore the default rate goes up. I think it is more to do with sentimental, whether the rate goes up or goes down by 1% or 2%. I think what is the key is that interest rate has to be stable. It can't, if the rate goes up from 8% to 13%, definitely default will go up. If the rate goes down from 13% to maybe 9%, obviously there'll be an impact, right? Yeah. I think it has to be stable. Because of the huge fluctuation in the interest rate market, a lot of companies have withdrawn from the fixed interest rate. Even today, some of the affordable companies, they do have a fixed rate option. In fact, now there is a regulation as well that we need to have that option. But the differential between the variable rate and the fixed rate is going to be quite substantial. If you remember, in the year 2000, I'm not very sure, I think 2 or 3, one foreign bank came out with a fixed rate of 6.95% fixed.
Right.
So when the variable was about 7.5 to 8%. Now, that was the first time we saw fixed rate in India. And that really impacted the portfolio because when the rate started going up, they couldn't change the fixed rate. And if they had to switch, there was a huge penalty. Because of the huge fluctuation in the interest rate market, a lot of companies, they're not so keen to sell under fix it unless the margin is, good enough to secure, their spreads.
Right, right. LIC Housing Finance, of course, is a fixed rate product. Do you see much traction on that?
No, we're not offering almost more than 99% is floating. We are also into the floating. Nobody's into the fixed rate thing. So no, honestly, I agree with all the others. I don't think interest rates have too much of a bearing, irrespective of what the repo rate is. Been 6.5 for almost 2 years now. But then there is a demand for housing loan, and if you looked amongst the companies, a company like LIC HFL offering an affordable product at 11, somebody else offering an 11 affordable product at 16. Both are doing business, both are growing. So it's not so much as to what the rate of interest is. Yes, it's a feel-good factor. If interest rate drops, the customer feels good. Otherwise, there's a demand for housing loans at various rates of interest across the country, across geographies, depending on the type of customer there is. So I don't think it's too much of a thing. Yes, it's a feel-good factor. A general euphoria is there. Rates have come down. People feel good about it, and they decide to take this major investment decision of taking a housing loan.
Right, right. We have completed a lot of time. I will take just 1 or 2 questions from the audience. Can I see hands, please? Yes, sir. You're from the... Can someone pass the mic?
Thanks a lot for the insightful discussion.
Please introduce yourself and keep your question very short.
Sure. I am Professor Sridhar, founder of Grand Alliance for Management Excellence. I am from Chennai. How is the talent crunch you are managing when your business is expanding and a lot of rural branches are coming in, but the HR force, which is must for you, how you manage it or what is the plan?
Anyone want to answer that? HR.
I think mortgage is a very simple industry. It's a simple product, simple industry. It is not complicated. It is not like, consumer durable or, some complicated. It's a very, very simple thing. It's only because of the demand-supply gap. We see that the salary levels of our employees go up because, again, there is a lot of switch between one institution to another institution. Otherwise, it is not so difficult to manage. We need ordinary graduates. Even today, if you look at the front line, you talk about any company, whether it is, you ask Ravi, you ask Mr. Tripathi, even in PNB Housing, the front line, it is not those IIMs and chartered accountants. It is a simple, ordinary graduate. And we have so many graduates. We have so many unemployment challenges across the country. It is not difficult at all. It is a very simple industry. There is no challenge at the front line. But the attrition was very high. Even today, it's very high. Attrition is high. It's only because of every company wants a trained resource. So somebody has worked for 1 year, okay, let me onboard so that right from day one, that person will start doing business. If somebody invests by hiring from campus, when I say campus, I'm talking about ordinary graduates, BCom, BA, BSc, or maybe BBA from the college, you train them, they will be better productive. They can give you better business. I think there are a lot of strategies which each company adopts. Our strategy, for example, is to try and hire from campus. So at least at the front end, so that they would stay with the company for a long time, the attrition would be quite lower, and therefore the HR cost.
Right. One last question I will take, yes.
Yeah. I'm Nagesh Alai. I'm a co-founder at a Gen AI tech company. My question was this: how do you explain the low yield, rental yield of 2 to 3% in the housing sector, when it is also seen as a growing sector where you are bound to get better returns? I mean, how do you explain this contradiction?
Okay.
Basically, if you look at mortgage, it's a thin margin business. If you talk about the first 2-3 segments, it's thin margin business because it's a leverage business. This business is all about leverage. Typically, companies focusing on, let's say, super prime, prime, and emerging, they operate on a leverage of 7 to 8 times. It's a thin margin business. So even if your NPS go up, let's say from 1% to 2%, I think the company will have huge stress on profitability. Within the mortgage segment, while we talk about affordable and emerging, these are high margin business. Whereas fair enough. I think he corrected me on the question. So basically today, if you see in India, 70% of the population is still, they have income levels of much below the desired levels. And when it comes to whether buying a property or renting, right, the yield on rental is very less. As you rightly said, it is not more than 2.5%, maybe max 3%. Commercial could be maybe 4 to 6% depending on the location and the pocket within the given city. The aspiration of EWS, LIG, MIG is to own a property once in a lifetime. And most of these properties are either bought or constructed for self-occupying and not as an investment. And therefore, this takes over on the return. They look at, they get that comfort saying that I own a property, I bought a property where I can stay, my kids can stay, my generations to come can stay in that property, A. B, it is not for investment. So they're not looking at the return. Eventually, they'll make gain on the capital gain. Property would appreciate because typically properties would appreciate. So they make money on property appreciation, but the idea is not to sell, but it's for self-occupying. And that's the logic, what is driving. However, at the high end, for example, we spoke about 100 crores, 50 crores, 20 crores property, which is super prime segment. There, you will have customers buying second property, third property. There is the choice between which asset class. Can real estate give me a higher return in next 5 years, or equity, or maybe debt, or some other instrument?
Right.
Can
Thank
I
you
spend
so
a
much.
minute
We
on
have
this?
completely run out of time. Sorry.
Let me spend a minute, since the question was more about yield, and you asked a reason why this yield is so low. Obviously, as he said, the appreciation has to be added up. So yield plus appreciation, on an average, if you're talking about 5 to 6% per annum kind of a property price appreciation, you're once again adding the two, are in the range of 7 to 8%, which is comparable to commercial asset class as well. So there's not much of a difference, only how do you look at, because in case of commercial properties, when the rental yields are high, the appreciations are not so much. So overall, any asset class in real estate, roughly about 8 to 9% yield is what you would look at.
Thank you. Thank you so much. I think it was a fascinating discussion. And the good thing that has come up is that affordable housing is here to stay. In fact, we are just at a starting point. Thank you so much, ladies and gentlemen. A big round of applause for all the panelists.